Hello. KSOLVES India Limited Q3 earnings are out and it's not looking the best. Okay, so first of all the earnings are in crores rupees. We are comparing Q3 to Q3 of last year. Okay, Q3 latest ones. This is the Q3 last time. So Q3 latest one, revenue reached 42.3 crores compared to 37.7 crores 12 months back. 12.2% revenue growth. Okay. Not the highest. EBITDA, earnings before interest, taxes, depreciation, and amortization, was 13.7 crores compared to 14.1 crores, 2.7% decrease in EBITDA. All right. Profit before tax declined by 5.3%. And finally, profit after tax for the quarter was 9.8 crores compared to 10.3 crores for Q3 fiscal year 2025, 5% decline. Now, what the company seems to be guiding for is this quarterly figures. It seems they had a temporary disruption. Okay, they had a temporary disruption. They changed some things. That's why growth is looking a little slow now. But they're looking that in the longer term, they're looking for larger deals, which will take more time to deal, basically longer sales cycles, and that's why some sales will come later. They're guiding for sustainable high future growth in the future. Right now, temporary disruptions. So you can see EBITDA margins have fallen from 37.3% to 32.4%. But quarter wise, they have improved. That's what they're saying, that there will be improvement in margins. Profit after tax margin fell from 27.4% to 23.2%. But compared to quarter two, there's been an improvement. So disruption happened. Quarter by quarter, they're improving. I guess quarter one was maybe the worst, or quarter four of fiscal year 25 was the worst. So now they're showing small improvements. In the long term, they're thinking they will have better things. But let's see if they achieve that. Let's see if they achieve that. Now, dividend declaration. The board has reached an interim dividend of 5 rupees per share, reaffirming our commitment to shareholder value. With this, a cumulative dividend for fiscal year 26 stands at 11 rupees per share. So for fiscal year 2026, they're giving a dividend of 11 rupees per share, which is pretty big. Our current share price is 280 something, as far as I remember. Yeah, 282, you see. 282, so 4% decline this day today. Okay, and they're establishing a subsidiary in Australia. The board approved initiation of the establishment of a wholly owned subsidiary in Australia. Now, commenting on the results, we have the founder of the company, Mr. Ratan Srivastava. He says, Quarter 3 fiscal year 26 performance reflects the accelerating momentum of our business, supported by broad-based growth across key service line. Broad-based growth across key service line. Okay, we reported highest ever quarterly revenue of 42.3 crores with 12.2% year-on-year growth, which demonstrates the strength of our strategy and the consistent value we bring to our customers. Our top 5 clients contributed 40% of revenue, indicating a healthy mix of accounts and continued strengthening of key relationships. We continue to win high quality mandates. Okay, we will cover these high quality order wins, expanding client partnerships, and reinforce our position in the global digital engineer landscape. As we look ahead, we remain focused on scaling sustainably and delivering long term value to our customers, shareholders, and partners. Okay, they're positive, optimistic outcome. Optimistic, nice, positive stuff. Then Mr. Umang Soni, the CFO of the company, he comments on the results. I hope this is a mail. Umang Soni. Quarter 3 fiscal year 26 has been a strong quarter with highest ever quarterly revenue and robust profitability. You already saw this. We have covered all this. Okay. A strong balance. Okay. Earnings per share improved to 4.13 rupees from 3.54 in the previous quarter. So 4.13 rupees for earning per share. Strong balance sheet and healthy cash generation. So balance sheet continues to be strong, have enabled us to continue rewarding shareholders with the interim dividend. Yes. So total dividend 11 rupees. Now, key wins. What were the key wins this quarter? Now, one of them I would like to note out is this. Onboarded one of the largest telecommunications companies in the Oceania region onto its flagship data flow manager platform. So DFM, data flow manager, is this newer product. They've invested a lot of money into this, and they're placing a good portion of their hopes, the future hopes, future growth onto DFM. So good to see they've actually gotten a client onboarded one of the largest telecommunication companies in Oceania region. So of course, data flow manager, so it manages the flow of data across, I guess, different data systems. I don't know. But company-wide adoption expected after the holiday break. So after the holiday break, company-wide, the entire largest telecommunication companies in the Oceania region are going to adopt this technology, data flow manager, adopt data flow manager platform across the entire company. That's good. Then it secured formal acceptance from its first European aviation client. So in Europe, they finally have gotten a European aviation client. What will this involve? It will involve managing mission critical systems under leading major NiFi platform version migration. NiFi is also related to DFM and related to data flow. So managing flow of data between like different systems, a complicated big system in companies, a lot of data is coming from different places, not the same thing. So managing data flow between different systems, from what I understand. Then they onboarded one of the largest payment service operators in Georgia. Now, the country or the state for Apache and NiFi support against NiFi for data. So it's again data flow, managing data itself. So yeah, some more wins. They marked a significant milestone with entry into the Australian automobile sector. So we are going to different geographies. We went to Georgia, we went to Europe, we are going to Australia, which is Oceania, part of Oceania. And again, we covered the Oceania telecommunication also. So they are going into Australian automobile. Companies implementing Odoo Enterprise Resource Management. Okay, another product, Odoo ERP. Then we had NiFi. Then we have DFM. So we covered Odoo is getting a new deal. All right, now one first Salesforce UK client in the travel arrangement domain. So in a new domain they're entering, UK clients. So again, geographical diversity we see. Okay, and it's setting up an interface between Salesforce and then accounting software. So products that are winning deals. Salesforce won one deal. Then Odoo products, they won another deal. Then here, NiFi and their own DFM. So different products seem to be winning different deals. First things for many, we have payment operators, we have aviation clients coming, telecom companies coming, and as we see here, travel arrangement domains are coming, and what else? Automobile sector. So clients in a variety of sectors are being catered to. I guess that's a good thing. The earnings was not good. They were not good. Really, they were not good. But the company did say that there's going to be disruption. They did say that. To be fair to them, they did say that. And let's see if they can achieve meaningful stuff in the near future. As far as I remember, they guided for 18% growth in revenues, at least 18% growth in revenues for fiscal year 2026 as a whole. 3 quarters have passed. Let us see if they actually achieve that 18% or they will have to downgrade that guidance also. And of course, when the con call comes in, the transcript, we will do a con call analysis too. That is it. Bye bye.